Next topic we're going to cover is order blocks. Order blocks, what makes them high probability and what are the characteristics of them? First of all, order blocks need to form at a key level. So bullish order blocks with a short-term low liquidity pool above it, or a bearish order block with a short-term high liquidity pool below it. They push price into a liquidity pool, causing a purge on stops. So an up close candle that pushes price into buy stops when bearish, or a down close candle that pushes price into sell stops when bullish. We'll outline those in the charts coming up. So bullish order blocks in a buy program, they support price action to go higher into the draw liquidity above market price, and vice versa with bearish order blocks in a sell program to support price lower, or resistance to draw lower into the draw liquidity below market price. When we are bullish, down close candles will act as roadblocks. When price moves down into them and support price higher, this is when it's validated. And for bearish, an up close candle will act as a roadblock too. So when price moves up into them and then resistance to turn down lower. Again, time frame alignments for order blocks. Same as all the other lessons, we have a monthly level into daily order blocks. We've got a weekly level into 4-hour order blocks, a daily level into 1-hour order blocks, a 4-hour level into 15-minute order blocks, and then eventually a 1-hour level into 5-minute order blocks. And all these different time frame alignments will be shown in the charts coming up next. So over here we have a USD CAD weekly chart, and again, keep in mind the previous lessons, right, with engineered liquidity and order pairing and external and internal range liquidity. We can see buy stops have been rated on this weekly chart on the USD Canadian dollar chart, right? Over here, buy stops have been rated. We want to turn down lower into an imbalance and going for that engineered liquidity. So what can we see over here? Buy stops rated, failure swing, right? Then we have this imbalance up here. So outlining those buy stops rate over here, this red box above here, right? Order pairing. Then think about the characteristics of a high probability order block, right? It rates liquidity and then breaks structure lower afterwards. So we have this order block over here, right? We take out buy stops and then price continues to break down lower, confirming this order block. So drawing out this weekly premium order block out in time over here. When we go to a 4-hour chart, and then we have some more structure to work with. Now take a look at this chart and see if you can spot another high probability order block only on a lower time frame. Right, think about the previous lessons again, right? Order pairing above these old high. So smart money accumulates sell orders to willing buyers, right? Then where is the liquidity? Where's the draw on liquidity? We have a failure swing down here, failure swing down here. So we have a draw on liquidity, we have a previous buy stop rate. Now what is a high probability order block in this piece of price action? If your eye went to this up close candle, that is correct, right? Because we take buy stops previously and breaking down structure afterwards. And remember, those order blocks need to form at a key level. And what is our higher time frame key level? We've got that weekly premium order block. Now spotting out this 4-hour premium high probability order block, right, as outlined earlier, this is where price action finds a roadblock, right? So price cannot continue up higher into this buy stops up here because we previously already rated it, then broke structure after, and think about the failure swing, engineered liquidity down here, right? So we retrace back into premium and then continue down lower. This is a classic high probability order block. Another example on Australian dollar, US dollar monthly chart. Again, external range liquidity, right? Monthly external range liquidity. So we rate these buy stops up here. So what do we do after external range? We go to internal range, right? We see this monthly fair value gap down here, being the draw on liquidity. Dropping down into a daily chart right here, and remember that old high got rated, right? And we have our draw on liquidity. After external, we go to internal, which is below here. But before we reach this external range, look where price is being supported at, right? We have this down close candle taking out liquidity and supporting price action all the way up into that external range liquidity. Another one over here, right? Forming a swing low in a key level, which is this order block down here. Price moves up once again, taking out buy stops over here. Price hits an imbalance, so what does it do? It hits a key level, right? So forming an order block over here. It has to hit a key level to be a high probability order block. Price is being supported by this order block over here, continuing up and up and up. Rates external range liquidity once again over here, but it's just slightly, right? So it's not like a significant buy side rate. So it's more likely that it will run this high again, as it is not as a significant rate on liquidity as you want to see before price action breaks down. Now we see a retracement back into discount, and what are we using again? We're using this high probability order block over here. Price is dropping into this order block. Now it's coupled up with a fair value gap also. So this is a layered PD array, right? So we have an order block and a fair value gap coupled up with each other, making this even more high probability that this is a very good level to buy from. After that, price action pushes up into that external range liquidity, and eventually we drop lower and lower and lower. And remember, we've these lows down here, right? So this is for later liquidity, engineered liquidity. After we take external, we want to go to internal range, which is on the monthly time frame, right? So we use daily structure to go back down into that monthly internal range liquidity. What happens up here? Order pairing, right? Willing buyers, willing buy stops are being paired up with smart money sells, and again, pushing price lower and lower and lower. So here we have buy side of the curve, right? Price being supported, every order block is acting as a support, and we are still in bullish order flow until we reach that external level, right? This is a key level. Order pairing happens over here, right? Buy stops have been liquidated and smart money can accumulate their sell orders over here. So price pushes down, 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 breaking structure, right? And what does the form over here? We have a high probability bearish order block. Now, why is this high probability, right? We take out buy stops previously into a premium level, which is a fair value gap over here. But important, this high gets rated and then price breaks down after. So we have this high probability order block formed where price action can act as a resistance to continue down lower, because we already, remember, took out external range liquidity on the monthly time frame. So now we want to go into internal range liquidity down here as in this monthly fair value gap. Again, breaking down lower, another order block, price being tapped into here, moving down again, another bearish order block tapped in again. And remember, also a fair value gap, right? So it's paired up with a fair value gap, making it even higher probability. And price keeps going down and down and down. Now, let's talk about inducement order blocks, which is this over here, right? We have this rejection candle, right? Long wick on the top.